All right, so we've been talking about net income not equaling net change in cash. So again, in our example, $100,000 of net income for the month. Our bank account didn't go up by $100,000. One thing we've been talking about is the principal payments on our debt. You've alluded to, Kristen, that those are balance sheet items. Walk through what's going on there. You know, we see the interest on the P&L. We see the principal portion on the balance sheet. Like, explain to us what's going on.
Yeah, now we're getting into the real accounting terms, right? And, like I said, most business owners, they don't think about that kind of stuff, but your loans live on your balance sheet because those are liabilities. Those are typically longer term payments that you have to make. And at the end of those long-term payments, you typically have an asset that you get to keep afterwards. And so those things have to live on the balance sheet. And so you have to really think about how much money you have left over at the end of the month to make those loan payments as well, not just pay your staff and, your utilities to keep the lights on, but also how much money you have to make those loan payments, and they should be considered part of your monthly expense.
Yeah, 100%. And I think that's why the statement of cash flows is such an underrated report, right? I'm really showing my accounting nerd here on talking about what accounting reports are impactful. But statement of cash flows is showing us on a monthly basis, right? How much true cash flow is going out the door, right? Looking at P&L is great, tells us profitability from operations, sure, but it's missing some of these key components we've been talking about. And debt payments are a big one, right? We have a lot of clients ask us, hey, am I in a healthy debt position? Am I in an unhealthy debt position? How do I determine that? There's a couple of things we can look at. One, statement of cash flows, right? How much cash are we losing to debt each month? We can look at the balance sheet and look at, how liquid are we? How much cash do we have in comparison to our overall debt balances, as you alluded to, as to what balances are sitting on the balance sheet. Another component that often gets overlooked is, how much AR do we have, right? And, our clients primarily are on cash basis accounting, so we don't see that AR on the financials per se, but if we look at a AR report out of your PM to look at how much cash we have, how much AR we're sitting on in comparison to how much debt we have, that's going to tell us a lot about the financial stability of a practice.
Yeah, you definitely, just not even considering the AR, just looking at that balance sheet and saying, do my assets outweigh my liabilities? And that's usually a big indicator of a common problem is you have way more debt out there than you have assets to cover it.